For viewers worldwide, good evening and welcome to Money Matters here on QTV. This program brings you the most excellent weekly economic analysis and business news. We will dive deeply into the macroeconomic indicators. We will look at the foreign exchange market, international trade position, foreign monetary policy, and we will also look at fiscal policy. For all the economic analysis that you need, please watch Money Matters. I am Malik M. Jallo, and this is Money Matters. Welcome back. In today's diary, we will first look at business news, and we will also look at the international foreign exchange market. We will look at commodity prices, and then the best section of the program, which is the interview section. First, the business news. The Gambia Chamber of Commerce held a town hall meeting where businesses discussed the causes of high cost of doing business in the Gambia, and the main driver is the ports. Now let's look at the business headline.
The event brought together business community, government and development partners to a common platform for a progressive discourse on opportunities, challenges and solutions to spur innovation, job creation and social cohesion. The theme of the meeting is an empowered private sector for efficiency in service delivery. In what was an open and honest dialogue, actors in the import, export sector and clearing agents, among others, expressed concerns about the high cost of doing business, which indirectly affects the increase in the cost of living. According to them, this is necessitated by both external and internal factors. Esa Wali, a clearing and forwarding agent, Alhaji Chano Jallo, a major importer, and Suleiman Juf, an exporter of cash crops, warned that the increasing cost of imports and exports pose a huge threat to the country and demanded immediate action from the government. They claim exploitation by shipping lines and agents who make bogus charges for services they don't provide.
This charge has no place in the operation cost in the port of Banjul, for none of the shipping agencies trying to introduce these new charges can justify it.
We are all aware of vessels staying at the port of Banjul for 2 weeks, 3 weeks. You have not yet received your container. So when you are shipping, the shipping lines will cost the time they will spend in the port of Banjul, the fuel they burn, the amount of money they will pay on the port, and the transit time. This is why our freight is much higher than Dakar.
That was our business news headline. Now let's head to the international foreign exchange market. Over the period, we have seen dollar strengthening globally. And this has not exempted the Gambia or the Gambian currency, as we have experienced high cost of living in this country as a result of high inflation, mainly driven by the Russia-Ukraine war, which has led to high importation costs associated also with supply chain issues. The dollar has remained relatively flat against the dalasi, which means the dalasi has remained a bit stable. It opened at 55.54 at the beginning of the week, and it closed at 55.60. This is still high in terms of historical periods, looking how the dalasi have been doing over the period. But like I said, the dollar is absolutely dominant in international markets, given that investors find it very attractive to invest in dollar-denominated assets, because the central bank of the United States, which is the Federal Reserve, has been more aggressive in terms of tightening monetary policy. From the dollar, we also look at the euro. Euro has not been faring very well, and there's a lot of issues, or there's a lot of reasons that may be the driver of this situation. It has never been low since its inception. It has fallen below parity, and this is mainly driven by the energy crisis, the Russia-Ukraine war, and the European Union imposing strict sanctions on Russia. As of recent, the European Union has been discussing a fuel cap, price cap for Russian oil in order to protect its consumers. The winter is coming, and investors are very shaky about what the ECB can do given its inevitable recession direct trajectory of the European economy and also the slow pace that the ECB has taken. The euro opened at 54.62 at the beginning of the week and also closed at 54.14. We have seen a downward spiral and a very rapid spiral against the dollar or the dalasi. Yeah, against the dalasi, it has been going rapidly down and very fast, opening at 54.62 and closing at 54.14. Let's look at the British pound. Liz Truss instituted or came up with the budget of 45 billion pounds in order to shore up the economy and stimulate growth. Policymakers around the world, including the IMF, are not very sure this is the right time to pump in heavy fiscal injection, as everybody is worried about the inflation in the United Kingdom, and this has seen the pound drop rapidly at its initial introduction. However, the Chancellor of the Exchequer, Quating, revised their proposed minimum budget and then excluding the 45 tax break for high income earners. The pound opened at 62.94 and also closed down very low at 62.13. This is also in relation indicating how the dollar is strengthening and how the dalasi has been able to remain stable against the dollar, and also how it has been actually performing stronger against the two other currencies. Let's look at international cross rates. If you look at the international cross rate, euro has been below parity for over the entire week, and then pound has not been performing strongly. This, like I said earlier, has to do with the European strategy in responding to Putin's war against Ukraine, as he tries to reduce gas supplies to major European countries, and also the strategy or the fiscal policy taken by Liz Truss's administration in terms of addressing the high expenditure or high energy prices and bills of the Britons. As we can see, the pound, both the pound and the euro have not been performing very strongly or extremely strongly against the dollar. This is an indication of absolute dominance of the dollar. Let's move on to the commodity markets, and we will look at key important commodities in which are in different sectors: energy, metals, agriculture, and livestock. Energy prices has been dropping over the period. However, recently the OPEC has announced its intention, actually this was done since March, to cut down its production quantity to 1.1 million barrels, or roughly 2 million, which represents 2% of global supply. This has raised the fears that prices of oil may remain steady over the period, may remain climbing rather over the period, as OPEC and its cartel members had a huge or have a huge influence in the international oil markets. And we look at gold, which has been seen as a hedge against inflation. However, dollar is becoming more attractive, and we have seen gold over the week open at 1,660, but went further to 1,720 and later declined to 1,690. This indicates that the investors have great confidence in the U.S. economy and the U.S. dollar. Rice, which is a staple commodity for consumption in this country, has remained fairly stable. Livestock has remained steady over the week. It closed at 19.56, that is beef per kilogram, and these were the commodity prices we were looking at. Now we will move to the most interesting segment of this program, which is the conversation or the interview. Welcome, viewers. We have looked at the commodity markets internationally, and we have seen how the prices have behaved. The most interesting segment of Money Matters, that's where we are heading to, and that is the interview. With me here today, I have Dr. Amadou Jallow from the University of the Gambia. He lectures economics, specifically macroeconomics and international economics. Dr. Jallow, welcome to Money Matters.
Thank you very much, Malik, for having me on the show, and thank you very much for those watching as well.
Great. Dr. Jallow, the dollar, more than 90% of international trade, or let me say global trade, is conducted or carried out using the dollar. And since the beginning of the COVID, and more so the Russia-Ukraine war, we have seen dollar being stronger, and this has impact on developing economies. It has impacts on the reserves of central banks globally. For dollar is a reserve currency that central banks around the world use to buffer in case there is liquidity situation. Many African countries, including the Gambia, Ghana, Nigeria, and Kenya, are all struggling to ensure that there is enough reserves to allow the purchase of goods or imports to be carried out smoothly. What is your take on the strengthening dollar?
Okay, Malik, thank you very much for that. I think it's important to start with understanding the factors leading to the dollar appreciating in value relative to other currencies, including major currencies like the pound sterling and the euro. So one thing we should know is that most people see the dollar as a relatively safe currency to hold on to whenever there is chances that the economy may go into a global recession. Okay, so that's one of the reasons, but also the most important factor behind the recent appreciation of the dollar, it's actually the fact that the US Federal Reserve, which is the central bank in the US, has actually been more aggressive with respect to responding to inflation. Okay, so they have responded quickly and also aggressively. We've seen that they've raised the interest rate in the US recently on 2 occasions, and I think up to about 1.25 percentage points, which is probably very high considering what existed prior to the recent increment. So that's one of the factors. And of course, we know what happens when there is an increase in the interest rate. Investors are always looking forward to higher yields. So obviously, they will tend to invest a lot more of their monies in those currencies. And by doing so, they are increasing the demand for the currency, which will actually lead to the appreciation of the currency.
Right. So given that you have mentioned, which is very perfect, the Federal Reserve has been hiking rapidly and very aggressively. I can remember, I think it's first 50 basis point and 75 and 75 and another 75. But does this mean that when this Federal Reserve hikes interest rate, it is exporting inflation? Would you say that's correct?
That's absolutely very correct, because one of the impacts currently in the US, you find, for instance, good that they import, let's say from Europe, a good, for instance, that was costing, let's say, $16 in the US, that was probably imported, let's say, from Belgium. Imagine, for instance, like the Belgian chocolate. Okay, now in the US, it's going to actually be much lower. For instance, it's going to be around $13 as a result of this hiking. So of course, yes, it's very true that one of the ways that US is trying to avoid inflation is by exporting it to other countries, to the rest of the world. That's actually very true.
Great. So I mean, why is it that when the US coughs, the rest of the world catches cold? Because if you look at it, it seems it is only the US economy that is resilient right now. Europe is in tatters. African developing economies are not the ones that you are looking up to, and China, given its COVID-0 policy, it's not meeting up to the shocks or being very resilient to the shock. So why is it that when the US cough, the rest of the world catches cold?
So we should understand that the US is one of the superpowers. Okay, globally they are one of the biggest economies, and so they are a major player in the global economy. Okay, so, and of course, specifically in these situations right now we are in, they are the ones that are faced with less crisis than the rest of the world. You've already highlighted, for instance, in China currently they have been faced with lockdowns. These have affected not only production but also supply chain. So countries that rely on getting most of their input supplies from China are currently facing production issues. But also, if you look at the EU, for instance, the current Russia-Ukraine war is definitely affecting the EU, especially in terms of oil prices. Unlike the EU, the US does not import a significant amount of the oil that they produce, they consume. Okay, whereas in the EU they are entirely dependent on this, and so the rises in prices of this oil is actually leading to a lot more issues in the European continent than in most part of the world. Of course, aside from that, most African countries, of course, also do their trade in the US dollar. Okay, so what happens, or what this means for these countries at this stage, is that any small increase in the value of the dollar will have significant effects on those countries. Okay, so for instance, let's take the Gambia. Most of the goods that we import them paying the US dollar. Okay, so what happens? So meaning, if for instance the US economy is more resilient, the dollar appreciates, it means it definitely will have a negative impact on the Gambia's economy, especially in terms of our import bill. The import bill will definitely rise. Okay, aside from that also, because the Gambia doesn't export much, if it was the case that we exported, we would have actually gained a lot. But but the fact that we don't export a lot at this stage, it means that most of it will actually be negative. Okay.
Right. So I'll interrupt you there. Since we have dived in indirectly to the Gambian economy and the FX market, so let's tailor it down. And the perspective that you gave on the dollar strength is, I think, is very, very fascinating. But let's tailor this down to the Gambia's foreign exchange market. Dalasi is not doing so well. Inflation is on the hike. Central bank have increased its monetary policy rate, I think, by 200 basis points in two MPC meetings. But we still see the dollar getting stronger and Dalasi getting weaker. But before we go deeper into that, I want us to disintegrate the demand side and the supply side of the foreign exchange. What are the sources of foreign exchange supply in the Gambian foreign exchange market, and what are the sources of demand for the foreign exchange?
Okay, so in terms of supply, we all know that the Gambia is mostly dependent or heavily dependent on tourism. Okay, tourism, it's like one of the major sources of foreign exchange for this country, and that was why during the COVID, especially in the year 2020 and 2021, most of 2021, we saw a significant decline in government's foreign exchange earnings because of the decline in tourist arrivals. But aside from that also, the Gambia has been heavily dependent on re-export trade. Okay, now the export trade, it's relatively lower compared to what we have probably 10-20 years ago because of improvements in neighboring countries and improvement in the airports, and of course with complaints about inefficiencies at the port. But re-export also is usually one of the major sources of foreign exchange, and more importantly of recent, especially to the individuals. Okay, to the individuals we have remittances. Okay, so we have many Gambians who are now residing abroad that send significant amount of foreign currencies to this country to support their families. Okay, I actually cannot remember the specific figures, but I know about last year the remittance figures were quite high.
778 million.
About up to 60-something% relative. If you compare it as a percentage of GDP, it's quite significant. And of course, also is evident. You can see it in terms of the developments we observe around us, in terms of the construction. Okay, the construction sector is one of the sectors that is really booming. And we obviously know that most of it, most of these investments are coming from remittances that have been sent by Gambians residing abroad. Okay, so that's in terms of the supply side. Okay, that's mostly how we gain. Of course, there are many others, but I think these are like key ones that needs to be highlighted. In terms of the demand, well, most of the goods we consume in the country here actually are imported. Okay, even rice, we are not we cannot produce enough rice to sustain ourselves. So most of the demand for foreign currency, I think it's mostly to meet up with our consumption, domestic consumption here. That's one of it, since most of the goods we consume are imported. But also, if you think about the fact that the Gambia government is heavily borrowing from international partners. Okay, so and most of these debts we are taking from international partners are denominated in foreign currencies. Most of the times it's a dollar, like you mentioned earlier. So in this case, an increase. There have of course been an increase in the national debt. Okay, mostly in terms of foreign. Okay, which is mostly denominated in foreign currency. So the need to increase or to raise money to service this debt in terms of foreign currency actually is also placing a huge burden. Okay, or it's leading to an increase in demand that potentially affects the value of the dollar.
Great. That's I think with the dollar denominated is 57%, if I am correct, if my memory serves me well, in regards to the external debt. You mentioned key sources of supply. You said remittances, tourism, and re-export trade. And I will agree with you that re-export is actually dying. So how exposed are the two main sources you have mentioned, remittances and tourism? How are they exposed to exogenous shocks during crisis, during economic turmoil in the countries, or the sources of origin where the remittances coming from, mainly from Europe and America? How exposed is that?
Oh, I would say significantly exposed. Okay, they are very, very volatile, because it's quite evident. Okay, especially tourism. Okay, tourism, it's mostly dependent on not only what happens inside the country, but mostly what happens outside. Okay, so for instance, this year, of course, this is debatable. Okay, we will expect that, okay, since economic conditions are relatively not good in most of the countries where most of the tourists coming to the Gambia come from, we will expect not to see as much tourism as one will expect. Okay, that's on one side of the story. But also, of course, one could argue, well, the fact that, for instance, the winter is going to be a more expensive one, we may see probably many of them going on winter tourism. I don't know if that's the right term that they're using for it, but we'll expect most of them probably to run away from their high bills by migrating to other countries or going on vacation to other countries where they don't expect to face such severe costs. So definitely tourism is significantly affected by exogenous shocks. We saw it for the COVID, and we will expect it also to happen with respect to the recent crisis. Aside from remittances, aside from tourism, remittances, yes, but of course remittances, it's important to understand. So it depends on the nature of the remittances coming into the country. If the remittances is mainly coming into the country to support people to sustain their livelihoods, we will expect that, except there is a very significant shock to migrants working abroad, the effect here, of course, would be significant. But if it's the case that maybe in sectors where migrants work, they are not relatively affected by this crisis, we may not see a huge effect on them. But of course, it's the case that migrants typically work in sectors that don't have much security, and they're usually very much prone to, many of these economic issues that happens. So that's here. So of course, to answer your question, both the main sources that we've identified here are definitely very much exposed to exogenous shocks.
There is one source of supply that we kind of left out a little bit, and I think it's like the bloodline of the economy, and that is international trade, exports, production. I'm going to put this together with 2-3 questions. And probably because we'll be running out of time, I'll let you wrap them up together. How important is it for us to have a basic export base? That's one. Number 2, the central bank reversed its course in terms of allowing the deposit holders, dollar deposit holders, to withdraw. Was that a right intervention? And they reversed it again. Was it right to reverse? How does this impact the public's confidence on the central bank's ability to steer the monetary system or the monetary policy of the country? Like I said, if you would help us summarize, that would be great. I know it's a lot of things that I brought.
Yeah, okay, starting with the second part of it. So of course, the central bank's policy of restricting withdrawals in foreign currency, according to what the central bank stated, was partly to counter money laundering, and as well, of course, to sort of like maintain stability in the FX market. Of course, this thing happened at a point in time when we saw that many of the global currencies were depreciating against the US dollar. So of course, one thing that was likely to happen in the case of the Gambia was to see people, acting in a speculative manner, which of course could have significant effect on the value of the dollar. So I think that was actually a very good move from my side. Also because what actually happened was it allowed most of the banks to really build their nostro accounts, and this I think was a move in the right direction from my own perspective. The
reversal of it?
The reversal of it, I think in this case most likely would have been informed based on the fact that they didn't see most of these threats to really be much. So I think from my own perspective that was a move that was in the right direction.
Okay.
And
the trade, international trade.
Yeah, so in terms of export base, well, unfortunately, the country hasn't had much export. Most of the export that we had from the country was mainly from the agricultural sector. And if you look at even domestically, in terms of agricultural share as a percentage of GDP has been declining. Okay, now I think it's about 23%, 22%, and so forth. So it's been significantly declining. Of course, export is really very important, especially for developing countries, because it's a major source of foreign exchange. I did not mention it because in the Gambia, it's really nowadays it's the contribution it's quite marginal. It's declining. But of course, the important thing here is to make sure that you have exports. Okay, not only of the basic commodities of raw materials, but also to have value-added export, which typically attracts a much higher price.
Right. Okay. It was great talking to you, Dr. Amadou. Our viewers, this is Money Matters, and this was the interview section or the conversation section where we were looking at the foreign exchange market and the financial system of the Gambia. Time is short, but I think Dr. Amadou here had deliberated on the most key issues that we wanted you viewers to have an idea about. And we meet from here. We will meet again on the next episode of Money Matters. Thank you.